Good morning, everybody. It is 9 o'clock, so we are kicking off. So, welcome to the Finance and Audit Committee meeting of October the 27th. Please note that this meeting is being recorded and will be streamed live on the Council's YouTube channel. And today we have online Mr. Armstrong and Councillor Micallard. Level 2 restrictions are required, and you will know what those are. You may not wear your masks, but if public do end up coming in here, please put your masks on. Health and safety, we're all staff, so please take note of the health and safety procedures on the screen. And we're going by normal voting today. I'm unaware of any technical issues. And you know about presenting your names, etc. So I think that we can move on to apologies, and I have apologies for Councillor Bowen and Councillor Dingwall and early departure for the Mayor on Council business. So I'll move those apologies. Do I have a seconder? Thank you, Councillor Naylor. And we'll go to vote. Yes, Mr. Okay, thank you. We'll add Councillor Finlay for early departure. And you may vote now. Okay, so that is carried unanimously. Well, I have no notice of additional items. Are there any declarations of interest? None. Unaware of any public comment? Yep, no, that's good. We're on a roll. Right, I am going to move the minutes. I'm happy to move both the confidential and the part 1 and part 2 together. If anybody does have any comments for part 2, we will have to move in. So if there's no indications, I'm happy to move both part 1 and part 2 minutes. Thank you, Councillor Naylor. Are there any matters arising? Right, we'll go to vote. And that is carried unanimously. And we will now move on to item number 6. And just before that, I'd just like to welcome our new administrator, Rosa, to the team. So welcome, Rosa. And we will now move on to item number 6 on page 11, and that is the quarterly performance and financial report. And that is Chief Financial Officer Stuart McKinnon. And also we have Andrew Boyle, Head of Planning, with Stuart. So ready when you are, gentlemen.
Morning all. So I guess the story of the quarterly report from a financial perspective is that we live in uncertain times, and obviously the COVID lockdowns had a reasonable impact on what has happened, and basically through a lack of activity. When you're locked down for 4 weeks, it's hard to get contractors to do work. So we are sitting on a surplus, a controllable surplus of somewhere around $2 million. The two major things that make that up are under expenditure and contracted services, around $1.2 million, and under expenditure and salaries. You'll have seen some of the publicity on what they're now describing as the Great Resignation. This council is not immune to that. Turnover remains stubbornly high despite our best efforts to recruit, and we are recruiting some quality staff, you'll be pleased to hear. COVID impacts continue to affect us, even though we're not in lockdown, particularly in the events space. In arena and convention centre, we're expecting to not make revenue targets in those areas. There's likely to be other impacts that I haven't mentioned that continue because of the lockdown status that we're in. Inflation seems to be a significant issue right now. It's the same story. I feel a little bit like a broken record. We continue to have difficulty attracting contractors to do the work at reasonable prices. There's evidence of suppliers no longer carrying the price risk on the materials, meaning the risk shifts to us in terms of those price increases. Our insurance is more than we budgeted for. And there will be some other examples of that as well. The good news is a $2 million surplus from a financial perspective is healthy. We continue to attempt to deliver our services to the public as best we can, given the resources we have, but they are still trying circumstances and potentially will remain so. That's all I've got. Andrew, Dan?
Just to briefly add, it's early in the year for the performance indicators, but they are affected by COVID. You can see that from them.
And you're open for questions.
Absolutely.
I'll just like to start with one. The Whakakatahi funding, overall I see we've got partial funding, some we've missed out. So overall, how much funding have we missed out on? Or are we relying on which we didn't get?
I was hoping somebody would be here to assist me with that answer. I don't have an exact number for you. There is a report, I believe, coming to Council to explain the impact of that.
Sarah is online, so...
So your hope has come true, Stuart.
Good.
Through the Chair, we actually were really fortunate with the Whakakatahi funding. There is one of our programs was cut by half, but most of them were cut by between 10 and 20%. Because of the detailed nature, which means that for most of our stuff, business can continue as usual. Because of the detailed nature of how Whakakatahi allocated the budgets, we will be bringing a paper to Council to look at the areas that were unfunded and ask Council for decisions on progressing those, because they are relatively small components of our overall workload. We were genuinely very fortunate in the allocation.
Okay, thank you, Sarah, and I look forward to seeing that paper. So the next question is from Councillor Nella.
Thank you, and thanks for the report. Just a quick question. On page 17 and 18, where we've got the capital new program and capital renewal programs behind budget, the variance to budget that's outlined on those two pages, are they all favourable variance as in underspend?
They are an underspend, yeah. I guess it's subjective whether that's favourable or unfavourable. It means we're not doing what we had planned to do in the timeframes planned to do it.
Yep. Okay. Thank you.
Mr. Armstrong.
Thanks, Madam Chair. Thanks for your report, Stuart. My question, or a couple of questions. The first is, the common themes are staff shortages, supply chain disruptions, and uncertainty, and that we've had 4 weeks under lockdown. So when I look at these reports, it seems to me the assumption is that we're going to get everything done and spend everything by the end of the year. And so my question really is that actually feasible, given that we're around 100 FTE shy of budget and facing all these other difficulties? And if it's not tenable, then how is the management team thinking about prioritising or determining what does get done and what doesn't get done?
Very good questions. And perhaps I should have said that in my opening statement. It does seem the likelihood, particularly of achieving our capital program, is diminished somewhat and seems unlikely that it will all happen given the delays and the pricing difficulty and the difficulty attracting contractors. Absolutely. Exactly what that picture looks like, we're not, we haven't done the work to date to have a really accurate picture of that. That's a process that we'll be going through from now really to say what is the likelihood, what is the forecast for the end of the year, particularly in that capital space because it is badly affected. From an operating perspective, we do continue to do what we can. Where there's staff shortages, we tend to bring in outside help if that's possible. So some of the, I guess, key functions like building consent, for example, resource consent, we continue to process them as best we can. I don't think that there's really an option not to do that. And we think that generally, from an operating perspective, we're not in as bad a shape in terms of delivery of those services, but in the capital space, it seems very unlikely that we'll achieve our entire program, and that will have knock-on impacts to next year's budget, which will come to this council for consideration as well, I suspect.
Okay, and I guess in that process you'll be thinking about disruptions, cost pressures, supply chain constraints, which might be temporary, and reflecting on those priorities and with that in mind, I guess.
Yeah, absolutely. And we're working, and Sarah's got her hand up because I know what she's going to say, we're working very hard on our procurement and different procurement options and bundling programs of work to make it more attractive for contractors to deliver them. Sarah may want to add to that. She's taking her hand down, so I'm assuming that's what she wants to talk about. So certainly the focus of the infrastructure team is how do we procure this stuff in light of the resource shortages in a smart way that still enables us to make this stuff happen.
Okay. So I guess we'll see what falls out of that in terms of expectations and priorities. My other question is around the staffing pressures that have been alluded to, and I guess I was just interested in how the management team are strategising and thinking about that, and have they changed their HR policy levers in any way around recruitment strategy, retention strategy, REM policy? Just strategically, how is the management team responding to these current market circumstances?
Yeah, I'll get Patrick to answer that.
Patrick?
Good morning. Through you, Madam Chair. Great question. A few components to the answer. As you've all been aware, we initiated in August, September last year a comprehensive redesign of our remuneration framework. That's ongoing, is on target to complete the design phase by December this year. One of the more tactical or operational steps that we've taken as we get more current data on what the going rate of the labour market is in Palmerston North, we've made adjustments to people's pay or put in place retention allowances where it appears that we are out of sync with market. And in terms of our recruitment practice in general, there's definitely now much more of a focus on I'll use the term employee brand in terms of the other wider benefits of why people might come and choose to work for Palmerston North City Council. What we are seeing in terms of our recruitment is it's net positive. So there's obviously a lag time between people have on average, the majority of our colleagues have 4-week notice period, and an average time to hire is probably in between the 6 to the 12 weeks, depending on the seniority of the role. But what we have seen is that we are making more appointments now every month than we are having resignations. One of the little factors which is great but not great is that over the past 3 months, approximately 35% of our appointments have been internal people, which is great because it shows career progression and opportunity, which we know is really important to people in general and very important to my colleagues in PNCC. But it doesn't help us get the net number of vacancies down as quickly as we would otherwise like.
Thank you, Patrick.
Thank you.
Steve? Okay. Mr. Armstrong, is there any other questions or follow-up?
No, thank you, Madam Chair. I'm fine. Thanks.
Thank you. So next person is Councillor Johnson.
Thanks, Madam Chair. I had some questions along the lines of Mr. Armstrong's, but since they've been answered, I guess my follow-up question to those is, given that we have all these challenges in trying to get work started and get work done, what additional strategies are being put in place to deal with that? So I hear all of the problems and I can see the consequence, but what are we doing differently to be able to pick up the performance in those areas where there's just a raft of things that are behind schedule and haven't been started. So I'm sure it isn't a simple answer, but if you can give us some indication of the response as opposed to the description of the problem, that would be helpful.
Yeah, I think most of our difficulties are in the infrastructure space, and I see Sarah's got her hand up, so I'm hoping she's going to answer that for you.
Okay, Sarah, I'll let you speak to that.
Through the Chair, thank you, Madam Chair. So I have talked to some councillors about what we're doing in this space. I think that the difficulty of getting contractors means that we are specifically looking at how we can bundle work more to make it more attractive and look to contract over longer terms so that we are relying on relationship contracting more. We're also looking at how we manage the risks across the supply chain because we have things like materials from overseas are on really long ordering times now. So we're looking at how we write our contracts so that we can separate up the supply bits from the install bits and potentially get them earlier, and also offer more potential for local materials, alternative materials, and looking at whether we buy materials ourselves early. It's a real benefit having a depot. We're very much focusing on our depot staff as a resource. We're very lucky that we have an in-house workforce, which gives us that sort of low as in small layer of things that we can always guarantee to get done because we've got an in-house workforce. We're also looking at bespoke things that we need from overseas, particularly how we can separate those out in our contracts and get them ordered early. We're looking at our contracts because we know suppliers and their supply chains struggle with particularly getting small subcontractors locked in for prices for 3 months' time or 6 months' time. So we're looking at the whole programming of work. We will be bringing a paper to council on this because we really need to look at how we program some of our work to bundle it together and to allow for uncertainty in that supply chain throughout the supply chain. So we're also looking at our sort of general contract conditions. One of the issues, so anything that can make our decision making faster and give more flexibility for things that are a long way away is what we're looking at the moment. There are quite a few specific things in hand. I hope that answers your question.
Yes, thank you. So I note in the Treasury paper coming up that there's a commentary around not needing to raise the whole amount of debt and looking at 70% of completion for capital programs. So is that now the expected level of completion, 70%, given that that's where we're going in a financing point of view?
It's not a forecast. That is what we're using to estimate what we may need to borrow by the end of the year. So there's no direct linkage. We haven't worked closely with the infrastructure team to come up with that 70%. It's a bit of a best estimate at this stage.
Okay, thank you. So then I've just got a couple of more specific questions about programs. So program 1803, which is Neighbourhood Streetscape Improvements, on page 55. It's in attachment 4, capital new. That at the moment is 1803. Yeah, that at the moment is under budget and on schedule, but we haven't. It looks to me as though we haven't spent any money on it. So if we haven't spent any money, how is it on schedule? I just don't understand that. someone could answer. Not Stuart, I mean, probably isn't the level of detail that you know.
Have we got somebody here, Stuart?
Through the chair, the status with the 9 elements of status are quite confusing. And one of the things that we've been talking about as a ELT is whether we can change the reporting somewhat to make it less confusing, while still bringing you good information that it enables you to spot where things are going wrong and where we're seeking to address that. So you're right. Particularly at the beginning of the year, the whole thing is very small numbers, and very small numbers trigger commentary on perceived changes. And it's not. I think it's fair to say that there's very little in here that at the moment we're looking at and worrying about from a broad sense.
Sorry, I didn't just catch that last bit. Very little in here that we're looking.
So we're looking at and worrying about at the moment from that broad sense.
Okay, so in regard to that particular programme then, if someone could update me, not necessarily now, when that's expected to start and or how it's progressing, I'd be grateful.
Thank you. We'll take that.
Thanks. And then my other question is about the animal shelter on page 51. So that's under Safe Communities 1552. So there's a comment there about why there's been a delay, and now due to lodge for consent in December 2021. Are we still expecting the completion of that project to be on time, or are we looking at the project now being delayed?
Yes, we are looking for it to be completed at the same time frame, just basically moving the front end down.
Okay, thank you. I'll leave it there. Thanks, Madam Chair.
Thank you. Mr Mayor.
Thank you, Madam Chair. Thanks, Stuart. Thanks, Andrew. Just probably to Sarah, if I could. I didn't quite understand, and correct me if I'm wrong, but Waka Kotahi, because I haven't been made aware as the Mayor, they fully funded our business as usual. Is that correct? It's the extra projects which you are seeking extra money for.
Sarah?
Apologies for my lack of clear communication earlier. No, they haven't funded all of the business as usual. They've funded, of the 5 programs that we put up, they've funded most of them to between 10 and 20% of a reduction. There's only one that they've reduced more significantly than that. So the majority of beginning of the year business as usual can be got on with, because we're clear that the overall budget hasn't been affected too significantly. But there are some things where we will be bringing back decisions to council about whether the shortfall would be seeking extra council funds to make up the half that Waka Kotahi has decided not to fund, or whether to change the programme in a different way.
Okay.
What I was seeking to reassure elected members was that the business as usual is progressing, because we have that level of certainty in most areas, because we have that level of certainty about the majority of the funding.
Right, thank you. I'll leave the rest of comments, Madam Chair, but just one further thing. And again, back to you, Sarah, page 19, which is the 3 water stimulus funding. Remembering that this funding received from government, I understand, needs to be spent. It's
work. So we have worked through in quite some detail what the risks associated with the Three Waters projects were, and whether we were likely to underspend. So there is a very small amount of money that we might underspend, but in general, this is just a timing thing of getting the work planned and ready and out of the door.
All right, thank you.
Thank you. Sarah, while you're on, could you just clarify the Whakatahi funding? So you're saying that the business as usual funding, that we did get cuts around 10 to 15%?
For most of it, we got some small cuts. There was one program wasn't cut at all. For most of it, we got some small cuts. But because the way that it was allocated by Whakatahi was very detailed and program specific, okay. It's complicated enough to warrant a paper in its own right. So we will be bringing a paper to you, but I'm seeking to reassure you that we did quite well, given that everyone was expecting cuts, and so that hasn't affected our day-to-day business too badly.
Okay, thank you, Sarah. Councillor Henkel.
And that Hui is actually planned when we return to a level 1. I guess I'm just trying to get some understanding of how that's going to impact the overall project.
Who's going to answer that? Oh, sorry, Sarah, I'm looking above you. Sarah.
Through the chair. Yes, we'd spoken to Rangatani about engagement in the design process, and Warren Warbrick's been nominated as the design liaison. But the actual engagement process has been delayed somewhat by COVID. We're actually looking at how we can, with the assumption of the government changing rules, we're looking at how we can kickstart that process. At the moment, we are still planning to start construction this year, so it shouldn't be. We are at the moment assuming that we will be able to do the consultation and engagement that we need to deliver. The sort of initial stages of concept design, sort of pre the detailed Rangatani involvement, have been done. We are simply constrained by not being able to talk to people at the moment. My apologies, I'm at home and someone's ringing my doorbell. I'll just put you on mute again.
Pat, are you right?
Sorry, look,
sorry,
if I can just follow that up. Further down the page.
She's gone.
Oh, right. Okay.
No, I haven't.
Oh, no, she's back. She's back. Sorry, I thought you were answering your doorbell.
I think if I can button here, am I able to?
Yes, I'll just get the CE to continue.
I think I would like to reassure Council there's certainly no unwillingness on our part not to either engage or to work closely with Rangatani. Their preference had been for an in-person hui, and so we are navigating through with them. If that's not possible, how we go about having that engagement. But we are certainly committed to having that, and we are certainly committed to getting construction underway during the construction season, but might be in the latter half as a result.
Yeah, thanks, Madam Chair. I'll leave it at that. Thank you.
Thank you, Councillor. Councillor Barrett.
Thank you, Madam Chair, and thanks, Stuart and Andrew. One of my questions was in the Streets for People space as well, and would just like to understand in terms of the increasingly derelict state of the old post office, sort of what lens we're applying to that, both in terms of challenges, but also potentially in terms of opportunities.
Stuart, who are you going to palm that one off to?
David. I think it's David.
Okay. Oh, there's David. Thank you. Thank you, David.
Yeah, look, we are looking at putting together a sort of support package from existing programs that we can offer to either the current owner or new owners to, incentivise action on that building. Certainly there's, with the current owner and potential owners, there's always been the offer of co-design in terms of a terminal and streetscape and upgrade to that building. But certainly, given recent events and the media coverage, we are obviously keen to really incentivise investment in that, and there will be, as I said, a support package from existing programs that we can put together and put to the current owner or future investors.
Okay. Thank you.
Yeah, thank you. Second question is diving into some of the KPI areas, specifically around the transport measures. And the second one there, that'll take us to page 28, it looks like. The second transport measure is around an overall smooth travel. And just wondered, I guess, if there's more layers of information under that, because averages sort of hide a whole lot of things, and whether we have information that could be drilled down in terms of sort of high volume traffic areas, because my sense is from both traveling the network and what I hear from people traveling the network is that it's more the very high volume parts of the network that we have concerns coming to us from the community around the state of the roads and smooth travel. So just wondering if we do have a refined set of information that we could see about that.
Well, Sarah.
Sarah's going to respond.
So, through the chair, I'm happy to distribute a note to elected members after this meeting on the basis of where we get to with the average quality of the ride. To Councillor Brent's point, we are just about to put some more information, the much requested information about the road ceiling plans on the website. Which will help align, I guess, some of the information with the planned expenditure. But I will circulate something after this meeting to indicate how we get the data on the average quality and what it's based on.
Great.
Councillor Barrett.
Thank you. Thanks, Sarah. Madam Chair.
Okay. Thank you, Sarah. Councillor Harpeter.
Thanks, Madam Chair. My questions are around Streets for People as well. I just wondered if we could get a revised timeline of when we think things will get back to work, and taking the point of what the Chief Executive has said and what David has brought to our attention. I just think if we could have a revised timeline of when we're actually going to be getting back on track so that we can actually be brought up to speed, but also so that our community can get be brought up to speed on when we're actually going to be getting back on to work on it.
I'll get the CE to answer this one.
Yeah, absolutely. Happy to do that. My second question is around the citywide stormwater, and just a question around that Whakarongo resource consent. Just wondered if someone could give us an update on that.
Whakarongo resource consent, is that you, Bryce?
I don't think so.
No.
We're actually just looking around the room, don't have the right people
like
in
David.
the room. Unless Sarah knows.
Is Robert there?
No. Perhaps we can come back afterwards for that one. Is that okay, Councillor? Thank you. Any further questions? Okay, Councillor Naylor.
Thank you, Madam Chair. Just a couple more questions following on from Mr Armstrong and Councillor Johnson's questions around the capital program. If there is to be some prioritisation of the capital expenditure program, and obviously it's been said that that's unlikely to deliver all of the capital program over the course of the year, I'm just wanting to understand how that will be prioritised and what level of elected member input there'll be to that process, given that we're just in the first quarter now. And also, looking at the graphs on pages 17 and 18 of the renewal capital expenditure versus the new capital expenditure, and at the moment we're tracking a bit slower on the renewal capital expenditure. That's a little bit more behind than the new, and I'm just wondering, is there any thinking around if different programs need to be prioritised or reprioritised, how that split might look between the renewal capital versus new capital?
I think given, I can help with some answer, but I'm not the decision maker on the prioritisation, but I suspect the answer is we will attempt to deliver what we practically and pragmatically can deliver. And so while we talk about prioritisation and not delivering to the plan, everything, I think there's a goal and an ambition to deliver what we are physically capable of delivering. And we don't know the full answer to that yet. And there will be some programs where the budget is either insufficient given the inflationary price increases, or contractors are not responding to tenders, and we don't know the answer to that yet either. So while I guess I appreciate the intent of the question, the answer is some uncertainty at the moment, because we don't really know. And that's the work that we as officers need to undertake going forward, and through ongoing quarterly reports we hope to give you the best information available at the time. But the answer is we'll try and do what we can, but what we're saying is the circumstances are not necessarily conspiring against us, but make it difficult because we don't know what contractors are available and we don't know what materials are available, and we need to discover that in order to be able to make those decisions. So we're not. I don't think we're in a situation right now where we're saying we'll just do this one, that one, and that one, because we don't have enough information to make those kind of decisions just yet.
Thank you.
Mr Mayor, do you have a further question?
Yeah, thank you, Madam Chair. Along with the Streets for People, which other councillors have been asking. So, I'm not sure who this goes to, David or Sarah. So along with Rangatane, are there other stakeholders in the design side? Have we got the chamber, the bid, possibly building owners, just to bring everybody along?
Yes, we do, but I'd probably get Sarah to give it, or Sue. Either or would be in a better position to answer that. But Sarah's got her hand up.
Okay, thank you, Sarah. I'll give it to you.
Thank you. Through the chair, through you, Madam Chair. Yes, there is quite an extensive group of stakeholders identified, which does, of course, include BID and the chamber. There is a stakeholder planning. Well, we've done stakeholder planning. We are a little bit, as Chief Exec says, a little bit constrained by COVID, so we're now looking at how we can get past that. But obviously, we're very keen to talk to as many people as we can and make sure that it aligns with the conversations that are going on about the cultural precinct.
Thank you, Sarah. Robert has come into the chamber, so Councillor Harpeta, would you like to repeat your question? And hopefully, Robert, you'll be able to answer it.
It was just an update on the Whakarongo stormwater and where it was up to, and it was the resource consent that Horizons had required.
Yes, we've lodged the resource consent several months ago. We've responded to one further information request. We are prodding them, saying, where is it? And in the process, we are also doing the detailed design, so we will be as ready as we can be to undertake work as soon as possible, go to the market. But we have to wait to see what the conditions of consent will be. So.
Do we anticipate any delays in that?
Well, it's already been significantly delayed, so it's just very slow. I don't know why, but yeah, it is what it is.
Thank you, Robert. That clears that one up. And Councillor Johnson, you have a question?
Yes, thanks, Madam Chair. Just following on from the answers we've had about the bigger picture situation, I wondered maybe the CEO or someone would like to comment on where we fit in the national picture, because presumably we're not the only council struggling like this. And if it's possible to give us a bit of an understanding of how other councils are perhaps struggling the same or worse or better, and where we might be able to get some, ideas or encouragement from the national organisation.
If I start, and then perhaps Sarah, I see you've got your hand up, you can perhaps add to this. But Councillor Johnson, you're right. All councils, all organisations that are trying to build yourselves, if you're trying to do anything in your own home or your own area, will know that that the market is extremely tight. On a number of levels, also other consultancies as well, so professional groups, engineering companies. The rest is not just construction; it's the whole gamut. And so we are in that competition, and we are in competition with others. We certainly have reached out to look at how we might all like to do things a bit differently. And certainly Sarah might like to elaborate a wee bit on that. But certainly it's not, and as you know, our contracts are not as big as, say, an Auckland contracts would be, or a Wellington contracts, or even Tauranga or Hamilton. So something in the North Island. So that makes it a bit more tough. We are considered a second-tier city from that perspective. So and a lot of our local organisations are very busy, extremely busy. Particularly on some of the major projects, including Te Āhua-Turanga and others. So, we're in a tight market, and we're certainly doing our best to get our fair share of attention. And where, as Sarah said earlier, we can tie them up for a reasonable period of time, where we can bundle, where we can take a long-term approach, which goes beyond maybe an annual budget cycle in order to secure those, we're looking to do so. So being a bit more agile and creative.
Okay, thank you. Okay, councillors, I have nobody else in the queue. Sorry, Sarah, I'll let you. No, she's right.
I was just going to reinforce that from the Chief Exec. Talking to other councils in particular, they're very much moving to either 3-year or, in some cases, 10-year contracts, which is, quite unusual. But we're seeing more and more council contracts moving that way, just to tie in those resources for a longer period of time. We're also hearing that the market say that things are going to get worse next year, not better. So everyone is looking at how they can lock in their resources for as long as possible.
Okay, thank you, Sarah. Stuart, is there any further comments? Okay, so now we've finished questions. There's definitely no one online or anybody I've missed? No? Okay. I'm happy to remove the recommendation. Thank you, Deputy Mayor. And the recommendation is that the memorandum titled Quarterly Performance and Finance Report, quarterly ending 30th September 2021, presented to the Finance and Audit Committee on 27th of October 2021 be received. And I'd just like to make the comment that we are into the first quarter of our financial performance, and we certainly are going into uncharted waters, and I think we're going to be in for a bumpy ride. We've got cost increases, we've got many challenges, staffing, inflation, cutting back our resources from Waka Kotahi. So I think we are definitely going to be in for some challenges, and I think just a heads up to councillors that obviously we will be expecting quite a few reports, and there certainly may be priorities that we're going to have to change, and there could be challenges. So I'll now move on to, but just thank you for the report, and I do have confidence that we have got a good team to help us ride this out. So, Mr Mayor, you're first up.
Thank you, Madam Chair. Yeah, look, sailing into uncharted waters, that might be the headline, and the unknown. But look, I think comparing with other councils is really good, and encourage the CE and the management team to do that, locking in resources, which I think the infrastructure GM spoke about as well. I note in the Christchurch Press at the weekend, the Canterbury councils all came together around resourcing, swapping remuneration figures, because they see this as a sector issue. So rather than trying to pinch one from Timaru or down the road from Christchurch, they all got together, especially in the planning and building, because the building resource issue down there is as bad as it is here. So I encourage our people to do that as well. I don't think it's a pinch from one or the other, but it's just to try to get a handle on what is going on and where do we get people from. So let's look inward first to who we've got around us, and some collaboration there, I think would go a long way. Thank you.
Councillor Naylor.
Thank you. Yeah, once again, a really comprehensive and valuable report that tells us a lot about all the things that we need to know in terms of what's going on for council. So thanks for that. And also thanks for the additional personnel information on page 65, which does give us a good, clear picture of where we are, and I hope that we can see that 103 positions that get closed in coming months. Just in terms of the capital program, obviously acknowledge the huge challenges there are with lockdowns and lack of contractors and the like. I guess when we've been given a pretty clear heads up at this point in the financial year that it's unlikely that we're going to deliver the full capital program, and I understand there will be reports that come back. I guess I just want to flag that I think it would be advantageous for there to be elected member input. Obviously there are some programs that's just about what can practically and physically be, is able to be done. But when we've got a $102 million capital program, and if we're likely to get to the end of the financial year and perhaps have only delivered a percentage of that, whatever that percentage ends up being, I don't know. I think what happens is that sometimes it's easy to look back and go, oh, well, if we'd had a choice, perhaps we would have prioritised this over that. From my perspective, I think it's really important that as much of the renewal program is done as possible, because I think the priority needs to be that we look after the assets that we've already got before we build new assets. Obviously, there are a significant amount of new program that is within our budget that if we can do those things, then that would be great. But I guess I'm just flagging that as those reports come back, it may be warranted that there is some elected member input into how we prioritise what is and isn't done, if there are times that there is a choice in that. So just that's it all.
Thank you, Councillor. Councillor Johnson.
Thanks, Madam Chair. And yes, thank you for the report, which I think gives us a realistic idea of some of the issues that we're likely to be facing over the next year with trying to complete the capital programs. And I think whilst it's tempting to look at our own situation and think about how we could improve it, we shouldn't lose sight of the fact that we are part of a much wider system, and we're trying to do this work in the middle of a pandemic. And that the stresses and strains that are on us and our council and our staff are on every other council in the country. And what we can achieve this financial year is yet to be determined. The situation, as we've heard several times, is very uncertain. And I think, although we might, and I'll hear Councillor Nanda's comments, I think we might have preferences for what could be achieved and what couldn't. In the end, it's going to be the art of the possible. What is it possible to achieve? Where contractors are available, maybe they're available for a particular project which is a capital new and not for another project which is a renewal. So I don't think we can afford to be too specific in giving direction about where priorities lie. I think actually we need to remain, I think as the Chief Executive said, agile and nimble and able to complete projects where they're able to be completed, no matter whether they're capital new or renewal or whatever. And also we need to keep our expectations realistic. At the moment we're in a kind of a calm before the storm maybe, and it's easy to think, oh yes, we should be on top of everything, but we're part of a wider system. Many of those factors are things that we can't influence as a council, and we're just going to have to do the best we can.
Councillor Barrett.
Thank you, Madam Chair. A couple comments. I think it's been pretty well traversed in terms of the challenges outlined in the report. I suppose a perspective around that is that sort of public investment often creates and realizes much more value when it's in a counter-cyclical cycle or counter-cyclical to the overall demands and economic side. And I think to some extent we might reflect on, especially with larger projects, where we are able to get and create the most value for both the city and the economy, but certainly interested to see us progressing as much as we can still at this stage, but sort of keeping that as a back of mind context around how we actually think about some of the really big pieces of the puzzle. The main comment I wanted to highlight as well was really just noting that these KPI set in the new long-term plan, this is the first report against that, and it's really good. Like, I really feel like we've moved up in terms of what we've set out as a KPI set to begin to monitor, and I think we have a more useful set of measures, and the commentary that's coming through I think is also quite helpful in terms of the level of specificity, and just really appreciate it's evident that quite a lot of work has gone into actually that side of this report, and that's really noted and appreciated, because I think core role for us as a governance or political arm is really looking at how the overall performance and tracking is going. Yes, I know some of us like to sort of dive in and help manage things as well, but really keeping our focus on where the overall performance is tracking over time is a critical function for us, and I think that this report, the way it's positioned now, helps us greatly in that regard. I will look forward to some further information around the transport as indicated, but overall really appreciate the report, acknowledge the challenges and headwinds that have been spoken to already, and thank you.
Councillor Harheader.
Thanks, Madam Chair. I do appreciate the report. I think it's a good report and a good update, and particularly in light of what we have been through, which was the COVID. I think the catalyst, I appreciate what Councillor Johnson has said, but the catalyst projects are our projects going forward, and that's what we have rated on. And I think if we are going to go off track on any of those projects, we do need to keep that communication going. So my feel is that we should carry on with what we have said that we were going to go forward on, and if we are going to go off that, then we should be communicating that. So I'm all for going ahead, going for these projects, and if we can, then if we can't, then we communicate that out to our ratepayers. But at this stage, I'm all for what we can do, but if we can't do it, then we communicate that out to our ratepayers. But well done on what we've put forward in this report, and thanks for putting that up.
Thank you. Mr. Armstrong.
Thank you, Madam Chair. Look, I support and agree with everything that's been said around managing expectations, communicating with staff, being pragmatic and getting what we can done. What I would like to add, though, is that we're an organisation that's maturing in a health and safety sense, and I think that where you're down 100 people and struggling to meet budgets and setting yourselves high expectations, and I know this will happen, but I think it needs to be said that everything we do needs to be looked at through that health and safety lens also. So I'd encourage the management team to put that lens up as often as they can when you're working your way through this process.
Okay.
Thank you.
Thank you, Mr. Armstrong. Okay, are there any other comments? No? So we will go to vote. Okay. So that is carried unanimously. Right, we move on to our next item, which is the Treasury report, 3 months ending the 30th of September 2021, and that's on page 67. And Steve, you're in the box.
Good morning, Madam Chair and Councillors. Just make a couple of brief comments, if I may. Managing many parts of the Council at uncertain times is difficult. Obviously, in the Treasury functions got that same element to it. We need to be able, in an ideal world, it's desirable to be able to know how much money you need to plan to borrow, and that helps set the scene for the way in which you operate. So we find, and have found for a number of years really, but particularly now in terms of those projections, not only for the current year but heading out into the future, make it, I guess, quite challenging to know what's the most prudent thing to do in terms of the way in which we set the framework. So right now, the sorts of things that we're needing to do involve making sure that we've got access to sufficient funds when they're required, and to do that we have lines of credit established, and you'll see in the report that we're working on and now agreed to extend one of the lines of credit with our bank for 4 years. That helps give certainty. We've also, during the quarter and again since then, raised some money to help refinance debt that's not really due for refinancing until April and August next year. So that, again, is the sort of thing that credit agencies look to, and it's important for us to know that we've got those funds in place to do that. So that's one element, having the funds available, and then being able to manage on a day-to-day basis, taking into account the best projections we can of what money is being spent on the capital program in particular, which is what most of the borrowing is about. Aside from that, it's looking at what's happening in the marketplace and trying to ensure that we protect the Council best we can from movements in interest rates, and for that we have a hedging program that's been in place for a long time now, and which is proving its worth in terms of helping to moderate what might happen into the future. And over the last 12 months, we've taken out quite a lot more of, in terms of swaps and fixed rate bonds and things, about $65 million worth of those over the last 12 months to help position ourselves in accordance with the policy that's in place. So what we do as well is we work with our advisors. We've got specific advisors to help us to check on the market, to determine best practice, and to protect the position as best we can. And interest rates, as you'll know at the moment, are moving at the shorter end, not quite so much at the long end yet, and we're borrowing most of our stuff in the long end of the curve. And so just as recently as yesterday, spent a lot of time with our advisors determining what our next step is and the extent to which we should be fixing the position. I expect that in the next few days we'll fix a little bit more of our portfolio as a result of that discussion, but it's something that we're managing on a day-to-day basis in these relatively volatile times.
Okay. Thank you, Steve. So first up for questions, Councillor Johnson.
Thanks, Madam Chair. Thanks, Steve. My question is about the cost of financing. So in the report you've said that the budget was 5.3, I think, or something, million, 5.9 million, but actually the cost was only 1.23 million, which obviously is good.
No,
is that not correct?
The 5.09 million is for the full year.
And
the 1.2 is just for the quarter.
For the quarter. So where it says finance costs for the year, you mean for this quarter?
Compared, I'm not just quite sure where you're reading, but in terms of the explanation on page 69 in that paragraph there, the first paragraph, talking about actual finance costs during the 3 months amounted to 1.23 million compared with the budget for the year of 5.0.
Right, sorry, I was looking at the conclusion on page 71.
Oh, maybe I missed something, did I?
The sentence, I mean, it's just about how you would suggest
I've missed a couple of words that should be said.
So that is actually the first quarter, that 1.23.
Yes.
Okay, that answers my question. Thank you.
Thank you. Mr. Armstrong.
Thanks, Madam Chair. Thank you, Steve, for your report. I had a question and I've just lost my electronic copy as I've clicked on the unmute button. But I think from memory it was page 76 or 77, and it's around the policy maxima for our interest coverage. And my question is, and I understand that you take the 10-year plan and then you moderate that for historic spend, and then you take out 3 water forecast expenditure. The way I interpret that graph, and it may just be that I'm getting it wrong, because the policy maxima is so much higher than the, I guess, underlying principle that you're hedging for interest exposure, the graph at least suggests that you could go out and cover that debt, the interest exposure on that debt, several times. And so my question really is, shouldn't the policy maxima position be based on the underlying notional principle that you're hedging?
The policy is based on our projected debt levels, the total debt levels over the 10-year term. And then, as you say, for the moment, to try to not end up in an overhedge position, we've given that a haircut, discounted it by a sum that we've mentioned as being 30%, which is just the figure we've chosen as a way of doing it, and been explicit about that. And then in terms of at what position you place yourselves in each of those years along the scale, you'll see we've got the summary now in terms of what the bucket for each of those years is. We're looking to, and what proportion would be fixed in that. So, and at the moment, the advice we're having is still that we're at the lower to midpoint throughout that period in terms of the...
Yeah, I understand that, Steve, and maybe I'm
missing, I think, the subtleties of your question.
So the subtlety of my question is, should that red line, should that be based on the underlying notional principle that you're projecting rather than the gross underlying principle, because effectively there is no cap in terms of hedging that core underlying debt, because it seems to me your graph, the red line in the graph, which is the policy maxima, is calculated on the big number, not the number that you actually believe is sensible to be hedging.
Well, it's calculated on the number that's had the haircut. So that policy maxima is after having the 30% haircut. So that is based on what we realistically expect that we'd be borrowing, and therefore proportionately hedging.
So in fact, that red policy maxima line, I just am misinterpreting that in those graphs on 76 and 77, and I'm sorry, I don't have the page open in front of me.
77, 78, yes, that's right.
Yeah.
So those are saying that that's the maxima based on the discounted borrowing levels that we would expect.
Okay, thank you. Maybe I might just to make sure I really understand it, take that up offline with you, thanks.
Absolutely, yeah.
Thank you. Thanks, Steve.
Thank you. Councillor Finlay.
Thank you, Madam Chair. Steve, you partly answered my question. I noticed that our interest rates mainly are all floating, and you're talking about looking at fixing them. What sort of rate will be looking at fixing? Do you have any idea?
Well, it depends what term we're borrowing for. The long-term projections at the moment still are that, whilst there'll be short-term relatively high rates, that in the longer term they'll reduce. And I've not got it in my head as to just quite what our rate is that we'd be looking to fix at the moment. But you can still see that we can still borrow in the market at the moment term that would translate to being about 1.5%. So it's still at the relatively low end there, but that's floating, and there is a risk that could still go
so a fix will be higher than that?
Yeah.
Okay, so you don't have any idea at all?
When I say the fixed interest rate, I'm misrepresenting the position, I think, a little bit here, because I've said if I just look at our rates that we had for the fixed loans at the moment, they were 1.16 and 0.9 are the ones that we had that we raised last year, and so that's risen by about, 40 basis points since then. So yes, 1.5 to something less than 2% anyway we could borrow for.
Yeah. Thank you. We can lock most of our loans in about 2%. Yeah. Thank you.
Thank you. Are there Councillor Naylor?
Sorry, just a really quick question while we're on looking at those graphs. What is the rationale for the 30% haircut?
Well, it's tossing the coin a little bit, but it's past experience of what level of capex overall, new capex, that we've delivered in recent years, and slightly on the conservative side of that, I suppose, as well, in that it's, I think, slightly better to be slightly underhedged than overhedged in terms of an outcome. So it's a conservative, what I would think would be, hopefully, a conservative projection of what we'd actually achieve, but it's got nothing, and it's not based on what we think we're going to achieve this year particularly, because who knows.
So just to check if I'm understanding that correctly, so is that presuming that we only deliver 70% of our capital program year on year?
More or less, yes.
Thank you.
Stuart, would you like to comment?
Yeah, only, I guess, reinforcing the comments I made before. It is a guess, absolutely, and what Steve was saying, which is completely true, is that there is a cost to hedging, and we're trying to avoid, I guess, needlessly wasting money on over-purchasing hedging it, which is the point of the 70% haircut.
Thank you. Are there any further questions, councillors? No. Okay, thank you, Steve. Right, we will move to the recommendation. And the recommendation is that the performance of Council's Treasury activity for the 3 months ending 30th of September 2021 be noted. I'm happy to move that. Seconded by Councillor Naylor. And I'd just like to comment that I'm pleased that we are going along a conservative approach for our hedging in future. I mean, we've got a few unknowns there with the capital expenditure and also the three waters sitting out there, which we, considering that's a third of our assets or more, that could have a bearing on what we're borrowing in the future. So I think it's a sensible decision, and I'm comfortable with the way we're handling this. Anybody else wish to comment? No, we will go to vote. And that is carried unanimously. We now move on to item number 8, which is on page 79, and that is the assurance report. And that's the independent progress update on the asset management planning maturity assessment. And we have Masuma and Jonathan. So when you're ready.
Good morning, everyone. This is just as per the audit plan that we had agreed on late last year. In 2019, there was a maturity assessment that took place, and it had given us quite a few recommendations around how we could improve our asset management practice in our organisation. Now, it should be noticed that they did acknowledge that we were already meeting minimum practice. This was more how do we improve from that point on. Now, what we have done in this report is just do a follow-up, see from an independent point of view which items have been completed, which are still in progress and which haven't been started, and then helped around facilitating the process of developing an action plan from this point on. We have recommended that in the next audit plan we do another maturity assessment itself so that we can understand what our new status is, but that won't be until at least mid-next year. And that's obviously subject to council approval as well. I will hand over to Jono to say a few words as well before we take questions through you, Madam Chair.
Morning, Madam Chair and councillors. I thought I might just set the scene because this is one of 2 reports that I'll be talking to you about today. So obviously there's a lot of overlap between this report and the Asset Management Improvement Plan Update report that we'll be discussing later this afternoon. So I'm just confirming with Masuma, we actually have booked in another Asset Management Maturity Assessment for June next year. So that has been booked with the assessors already. So I guess just firstly, just to be clear about the purpose of the Asset Management Maturity Assessment, really it was around identifying our asset management gaps to inform the setup of the asset management function. So from our point of view, it was never going to be part of the original work program for the asset planning division. And as soon as we were established, obviously, then we went straight into having to develop a program of works and the asset management plans to support the 10-year plan. Now we're obviously into that part of our work program that is concentrating on the asset management improvement plan. One of the things just to make you aware of is since this report was drafted, and it was drafted a while ago, I think, now that we are into our improvement plan, this report talks about 20 of the items being in progress. Since June, we've increased that by another 24, so there's now 44 items rather than 20 items that are currently in progress, which is pleasing. Just lastly, just to be clear, in this report I talk about some of the obstacles that may sort of impact on our ability to deliver the 4 improvement plans. So in the report, obviously it's important that we retain existing capability and institutional knowledge in the organisation.
a lot of the work we do is right across the organisation, and we rely on others to work with us to progress a lot of these items. Obviously, other work demands like information requests from around Three Waters reform or an early LTP could obviously crowd out our ability to move work forward. And then lastly, I think for us, as we're developing our work program, change management is really big for us because a lot of the improvement items relate to the way we work, BAU. So it's around looking at reviewing policies and procedures, not just at high level, but procedures at our operational plants and things like that. So change management and the ability of different parts of the organisation to absorb and give effect to that change is something that we're having to manage very carefully with our work program as well. So happy to take questions.
Thank you. Are there any questions, councillors? I'd just like to ask one. So with this whole reporting now and a lot of these programs for improving, are you comfortable now that you've got budget set in place and the resource set in place to complete the work that you need to complete?
I guess the resourcing question is something that needs to be balanced with the needs of the broader organisation. What I would say is what we do have now that we didn't have before was a dedicated asset management function. Yes, we could always do more with more resource. As discussed in the report this afternoon, this is a 5 to 7 year process. It's a big boat to turn around, and so it's not going to happen overnight. What I would say is that we are in a better position because we do have a funded program now. We do have $600,000 of budget to spread over the next 3 years to get help and to move this work forward. So in that respect, I think we are in a good position, and we're comfortable with where we are at the moment.
Thank you. Councillor Hapeta.
Thank you. Hi, I'm just looking at one of the activities that's on your schedule under waters, which is under the stormwater. So it's the halfway down the page, which is the need to schedule CCT data collections for the stormwater. So how will you do that? Will you actually put a camera down there and will that be going down into all of the stormwater systems across the city?
Yes and no. Yes, it is a CCTV camera, and we have a program in place to do that. What I would say is that the program we have in place and the funding we have in place is a good start, but it's certainly, if we want to cover more of the network, we'll need more resource in the future. But essentially what it does is that we get a CCTV camera down there, and there's a program that identifies any faults. Probably what we've done in the past is we've had CCTV programs across our different activity areas to do that, but it's been happening in a little bit of an ad hoc way. So we're trying to, through my team, is bring that together into a coherent program so that we maximise the use of that budget over the next 3 years. But it is a start.
Wouldn't you go to the weak areas first that have got weak points, or are you going to go citywide and just look at every area across?
Look, one of the purposes of CTVing is actually to get condition data so that you can then target where you spend your ongoing maintenance and renewal budget. So we'll target, first of all, those areas that have had recorded failures, and obviously those areas, those parts of the network that we deem as critical, as opposed to other areas where if we got failure, the consequence wouldn't be so high. So we just use good professional practice recording of where we've had asset failures in the past. But to I guess address the last part of your question is, in terms of targeting areas that need to be targeted, I guess once we get the CCTV data information, we'll be able to do that better in the future.
Thank you.
Thank you. Councillor Barrett.
Thank you, Madam Chair, and thanks, Ms. Emma. Thanks, Jono. Just around some of the specific actions in the rather long list there. In a couple cases, there's reference to reviewing of the mix of maintenance versus renewal versus new expenditure, and the dates on those were quite future, and I perhaps naively assumed that we sort of did that at least every year. So just wondered if you could clarify what the action actually is that's going to happen further down the track here relative to business as usual in terms of how we approach that.
I guess one of the issues that was highlighted in the maturity assessment was the fact that, first of all, we didn't have any policies or framework around how we prioritise investment in our renewals and in our capital new. So part of that is going back to first principles and developing some policy and a framework around how we make those decisions. And then putting in place, I guess, some tools like program prioritisation, things like that, to better inform our decision making. It's probably fair to say at the moment we're at a very base level in that area. So before we even make some of those decisions, we've got to go back to first principles and actually develop some frameworks and some decision making criteria first to inform our decisions in those areas.
Thank you. And I guess then to understand the rationale of sort of leaving that as the sort of last or capstone sort of action, is it that we need all those other actions to sort of give us enough inputs to reassess that? And is there an argument to sort of flip it on its head and say, we'll actually have that first principles discussion and approach now and then work forward from there?
Look, I think that's probably, if you don't mind, Councillor, if we could maybe flesh that out this afternoon, because certainly in that report there's a section in there that talks about our prioritisation and our approach to prioritisation, that we can probably answer that question in a bit more detail. What I would say in terms of our prioritisation is we've looked at risk management and criticality as the first lens in terms of our prioritisation, and then I guess other considerations will follow that. But I can probably certainly flesh that out in a bit more detail with you this afternoon, in particular with Helen Sheridan, who is the project manager of the improvement plan, and probably able to give you a bit more detail there.
Great, thank you. That's appreciated. And finally, and sorry, I've lost track of which specific line it is, but this is probably more for you, Masuma, in terms of understanding. In some cases, some of these actions are in fact, well, at least as I would read them, ongoing. They're not sort of a fixed time point. Sort of understanding what the sort of audit side of that looks like when something is marked as complete, but in fact it is something that needs to endure. How do you approach that?
There's a couple of ways. So if it is ongoing and we've had a look, what we would check is that there's a plan in place for that ongoing work to be completed, and we might include it on our spot checks, and then from time to time check in and so that it's actually working per plan. Or otherwise we will follow up on it. If it is material, then we would follow up on it on a 6-monthly basis just to check in and make sure that it's actually still happening and still as effective as it should be in mitigating the risk. Does that answer your question?
Yeah, I think so. Yeah. So it sounds like that's a proactive approach from your side rather than waiting for exceptions to appear from within the process. Is that a fair summary?
Yeah.
Right. Thank you, Madam Chair.
Thank you, Councillor. There are no further questions? No. So we will now move the recommendation. Thank you. You may step down. Thank you very much. That the memorandum titled Assurance Report Independent Progress Update on Asset Management Planning Maturity Assessment and its attachment presented to the Finance and Audit Committee on 27th of October 2021 be received for information. And I'd seconder, thank you, Councillor Naylor. And I'd just like to make the comment that I'm so pleased that we've finally got a policy and framework document. That's something that I know that we've been asking for a long time, to finally have some structure around this, that I have confidence that going forward that these things will be addressed. And although we're not quite where we want to be, at least we have got measurements of where we are and where we need to put some money in and what we need to improve. And I'll certainly be supporting budget for another maturity assessment for next year, so that we know that this is our baseline and that we know we've improved. So I'd just like to thank you for the comprehensive report and the work that you've done on this. It's excellent. Thank you. Right, there's no one else wishes to make a comment, so we will now move to vote. And that is carried unanimously. Just pass to Stuart before we go to the work schedule.
Just a very quick introduction. So the gentleman you see behind you in the white shirt and the black jacket, he'll stand up for us, started yesterday, and he is the new finance manager for the council and has come from Taurua District. And so welcome, Cameron, and sorry to embarrass you like this, but the councillors will no doubt have been wondering who the strange person sitting there was that they don't know.
Okay. Welcome, Cameron. Right, we will now move to our work schedule. There's questions on the work schedule, so Councillor Hapeta.
Yep, just one question around the procurement review. It just got 2022. I just wondered if we could have more of a certainty around when that was coming through. Just 2022 seems quite vague, so I just wondered if we could have a bit more surety around what date in 2022 it's going to come to us.
I don't have the detailed plan with me, but there is definitely a time frame on it. That will probably come to you in December with a new plan in place, because we are just looking at what the business needs are as well, so that we can actually resource those reviews, and the division itself is ready to take on a review, because it can be quite time consuming. It should be early 22 though.
Thank you.
Thank you. Councillor Naylor.
Thank you. Just looking at item number 5, the CET Arena Redevelopment Project Closeout Report. In the current position, the comment is that it will be presented along with the internal audit on the Arena Development Project Report. But that item is number 10, and that says February 2022, but the item number 5 actually says November 21. So I'm just wondering what the time frame that we would expect to actually get that report. Is it correct that they're both coming together, and if so, will that be November or next year? I can take that one. They should come together next year. We did change one, and I think it's just an oversight that the other date hasn't been changed.
Okay, lovely. Thank you.
Okay, so number 5 is now changed to February 22.
Correct.
Okay. Have you finished, Councillor Naylor? Yes. Okay. Councillor Johnson?
Thanks, Madam Chair. Just a question about item number 4, which is down as Rates Review Progress Update. And the point of instruction being March 2021. The Rates Review point of instruction was actually 2018. So I wonder why the point of instruction has now changed to 2021.
They'll go back and check it and answer that for you.
Okay. And so when it says progress update, I suppose what I was expecting was that the rates review final would be coming to us in November. So if that's the progress update, when can we expect the final?
Who would like to answer that? Steve, thank you.
As you recall, you've had a brief workshop about that, and what we're working on right this week is the outcomes of the latest revaluation, and taking that into account in terms of determining quite how we'll report back to you next month in relation to the rates review. There are some options as to quite how we go about that, and it's a little bit dependent upon what we see coming out of the revaluation and how we might suggest to you both that and the rates review can be handled. So the aim is to try to get something to you next month, which could either be what next or it could be, but most likely we'll be suggesting a course of action to you as to, I mean, it depends what you consider a completed rates review, because there are a range of things that you could say you've done in order of a review. And what we're looking to summarise to you is what the options are right now.
So, Steve, just to follow up, are you saying that you're going to wait for the data for the valuations to see how it impacts the review?
That's part of what we're considering at the moment, because there's a significant impact of that. And I think I've mentioned before, but I'll just say it again, that we will need to take some action for next year as a result of that. And we're just trying to package together what we suggest is the most appropriate way of doing that, and the timing to do that, and the most likely way of doing that might be something that doesn't confuse the public too much by having several things happening at once.
Sure.
I think if I was to interpret what Steve is saying, is that the revaluation coming up has such significant movements that when you do a rates review modelling and look at the comparatives without understanding the impact of that rates revaluation, I guess it changes the outlook. And so what I sound like I'm babbling now as well, because I'm trying to think quickly in my head what I'm trying to say. What we're trying to say is, in order to do a successful rates review with some modelling that makes sense going forward, we need to incorporate what's happening in the rates revaluation, because you're talking valuation movements that are significant, and without changing anything, if we model based on the current valuations compared to the future valuations, you're talking a different story. And so I think we're trying to make sense of that in ourselves, because we were asked for modelling as part of the review, and what we're saying is we need to understand how that valuation impacts that modelling.
I'll have some comment then, please, Madam Chair, after the questions. Thank you.
Okay, thank you. So there's no further questions, so thank you, Steve. So hang on, I'll move that the Finance and Audit Committee receive its work schedule dated October 2021. Have a seconder. Thank you, Councillor Naylor. And you're wishing to comment, Councillor Johnson.
Yes, thanks, Madam Chair. I was a bit alarmed to hear the comments around the rates review. The rates review is not meant to be a response to valuations, which change every 3 years anyway. The rates review is meant to be a system, a look at the system of how we rate in general, not a reactive response to valuations. And I'm a bit concerned that we're getting a conflation here of the changes that occur due to revaluation that we may, as we have in the past, want to mitigate in some way, versus a consideration of the system of rating, which is independent and not related to valuation changes. It's more of a wider overview. So that's the first concern. The second concern is that this item has been on the work schedule for years, and every time it comes up, there's a delay for what seem at the time to be good reasons, and I'm sure they are, but ultimately we're just never getting this coming to us. And so my comment would be that I want to see the rates review come to us as a separate piece of work from any mitigation to valuation changes that we might be considering, because those are things, those responses to revaluation changes are things that we do anyway. They're independent of a rates review. And what I don't want to happen is a decision about a rates review and how we rate to be based on a one-year change in revaluations. That's not going to be a helpful or long-term decision-making. So I guess I'm feeling a bit frustrated.
Councillor Denison.
Thank you, Madam Chair. I can understand why Councillor Johnson is feeling frustrated, but actually I have a level of comfort on the officer's approach, taking in consideration of the revaluations. The reason being we've had record growth over the last year, let alone the last couple of years, and house prices have lifted significantly. And so therefore any redistribution of the rate take will have significant effects. And so therefore I don't see a need to rustle feathers in our community without knowing the actual consequences ourselves in the upcoming report before we start taking a final report to say whether we're going to go ahead with any change or not. So I'm comfortable with the two-stage approach. Thank you.
Councillor Finlay.
I actually support Councillor Johnston in this. The rate review works out how we will rate the property, and it doesn't really matter how much the property is worth. It's the system we use, not the value of the house that we're looking at. So I agree with Councillor Johnston. There is no reason that the rate review should be held back because we've had a new valuation.
Are there any further comments? I'd just like to make a final comment. I agree with Councillor Johnson. We are looking at the how, but I certainly would want the data after we make a decision to run it through, because we're going to look very stupid if we've come up with a policy this way and the data blows out and the people that we least want to impact, we impact. So you have to run the data and the policy together. I'm sorry, it's just something that you would do when you're making decisions like that. Anyway, I will now go to the vote. That's the final comment. That's okay. And that is carried 13 votes for and 1 against. So I'll now close the Finance and Audit meeting, and we'll be back here at 1 o'clock for your